Let's talk about the big picture for the market. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 26, 2021. I'm showing the S&P 500 ETF, the SPY, here on my chart. It's a daily chart, and you can see I've drawn a couple of lines, a lower boundary, upper boundary. So the market, since about a week ago, hitting an all-time record high, has gone sideways, and I think the market is waiting for all kinds of things, and we've had this impressive run-up for over a year, right? Really impressive bull trend, and at the moment it's going sideways, and there's a lot of things going on, and so let's just look at the big picture here. What it is that we should be focused on as traders that could affect the market. So here's the big picture right now as of Sunday, April 25th, 2021. So the indexes are at record highs. There was a short-term, very, very small pullback last week. The market did not like the proposal that was floated out of the White House about a capital gains increase, basically doubling it. Infrastructure spending is a big deal. There's no, the legislation's not going to be passed probably till this summer, and we'll pick that topic up here in a minute. But there's a lot of money in play. The FOMC meeting is coming this week, Federal Open Market Committee, and their decision on interest rates, what they're going to do about inflation. So far they've been dovish and said they will tolerate more inflation than normal. So we'll see if they maintain that stance, and if they do something different, that could cause a reaction, right? There's no major economic reports coming out next week. We are in the middle of earnings season. There have been some positive results, but there's very high expectations during this economic recovery. And so companies that, like financial sectors a couple weeks ago reported very, very good results. They're up a little bit. And then companies that miss, like Netflix, get absolutely hammered. This week we got Apple reporting, and I think that's going to be a big deal. They're a huge and important company, bit of a bellwether. So we'll see what happens with Apple. They're going to report Wednesday. Gold's heading up. It looks like investors are moving to a degree to typical traditional safe havens, locking in some gains with the market going up and stuff like that. And there have been some discussion about maybe crypto and Bitcoin being the new haven, but crypto's been hammered lately. Some sector rotation was happening. People came out of tech and into consumer cyclicals, but that's changing. Now the money was going back into tech, so it's a little bit weird. And then there's, you just see a lot of articles about, FOMO, fear of missing out, and, a lot of retail investors, and typically in bubbles, retail investors come in at the very end. And, I call it FOMO, but I don't want to get burned. So people are a little antsy about stuff, right? My conclusion is, in the short term right now, individual stocks, short-term plays are the real focus, and we got to watch the indexes and see if there's going to be a correction someday. History tells us that. I don't know if it'll be next week, next month, farther down the road, but the indexes and the market always has corrected. So here's the dashboard from CNBC. What's going on overnight for futures before we get to open on Monday, and it's flat, absolutely flat, right? Dow's down 0.05%, S&P down 0.06%, NASDAQ 0.03%, oil's flat, and gold is up a few ticks, but essentially flat. So I mentioned earlier that infrastructure was a big deal. Mr. Biden's proposed roughly a $2 trillion infrastructure plan, which by any objective measure included things beyond infrastructure. A lot of social spending. And now the Republicans have floated a new plan infrastructure light, and instead of 2 trillion, it's 500 billion and some change, and it's getting support from Mr. Manchin, a Democratic senator who is seen as a moderate and kind of a swing vote, and he's offering praise for the GOP plan. So a lot of stuff in play, a lot of things could happen. And again, I think the conclusion is, in the short term, the plays are in individual stocks that are moving on their own news. Short term, days to a week or maybe even 2 weeks, move on news on individual companies, and then we'll see what happens with the overall market and any developing news around some of these big deals, and then trade accordingly. So that's where my focus is. I've got a great watch list of individual stocks. We're trading them with my I'm trading them in my own account and publishing them to my subscribers. And we'll continue to do that, and we'll pay very close attention. And when eventually a correction begins, could be some good money made, because the market takes the escalator up and the elevator down, like it's done so many times. And there can be big profit, but you got to just be disciplined and wait for that, and make sure it's proven. So meanwhile, hey, we'll do individual stocks, and we'll follow the trend. All right. Well, that's it for this week. Take care, trade safe. Always use risk control in your trades, right? Any trade that you take, no matter how good it looks, could fail. So when they fail, we want to lose a little. And when we're right, we want to make a lot. So use risk control. Keep the winners big, losers small. And I'll catch you on the next update. Thanks.